Welcome back to the final round here on Yahoo Finance. Robinhood has become a favorite during the coronavirus pandemic, with more and more people using the app to trade. Now, it stands out amongst some of the other online brokerage services because of its zero commissions and the ability to trade just a fraction of a share. So for more on this, I want to bring in Yahoo Finance's Ethan Wolff-Mann. And Ethan, I mean, one thing is clear that when we've talked about this, that Robinhood makes it so easy for you to trade from anywhere. And from the stories that we've read and the firsthand stories that we heard, it's clear that it is addicting here for some users. It clearly gets people to trade more, but you're looking into the reason why this is not necessarily a good thing.
Well, what's really interesting is obviously, the biggest thing to prevent people from trading a lot is money, and it's free. The thing that I think is most interesting is it's on the phone, and it uses the same kind of nudgy behavior that a lot of Silicon Valley apps use. This is essentially, not only can it, Facebook and Instagram kind of ruin your self-confidence and things like that from a personal level, but this can also ruin your portfolio. If you are incentivized to make a lot of risky moves, that is not good. And I think we've seen more and more people talking about this a little bit more in sort of the Silicon Valleyization of investing. And we saw in a recent New York Times story how much Robinhood actually makes off of the trades that their users execute. And that's something to really keep in mind when using it. But I was thinking the other day is, as you know, I often would say, a great piece of investing advice for someone who's looking to get in the market for a long time is to forget your password. And I think similarly, like inviting a vampire into your house, it's probably, for many people, a good idea not to invite certain apps onto your phone. And I think this could be part of it. I was reading a lot of information, a lot of studies about having excessive trading. And generally, if you are trading a lot, unless you are extremely rich, there are no shortcuts in life, and you will probably lose. So that's sort of the gist of this. And I think we're going to see a lot more out of this in the coming months. Right now, the S&P is obviously still flying, but if that turns around, we're in trouble.
Ethan, I've been thinking about Robinhood's place in the investing environment, because obviously they pushed all their big competitors, to cut their trading commissions to $0. But I do wonder if there's a world in which those competitors are happy that Robinhood is getting more people involved, because sure, I have $1,000 in Robinhood account. I screw around, I lose some money, but now I actually care about the stock market. And if I want to save for retirement, I might then go to Fidelity or to Charles Schwab and to one of the big guys for what you might say the real investing. And I kind of feel like the silence from those bigger players is a tacit endorsement of what Robinhood has done, which is draw in previously not interested potential investors into the markets.
I think that's a fair take, especially when you consider the various snafus in Robinhood's platform. They've had some outages at pretty inopportune times. And some of the tools, they have tools like margin and options and things like that. But for certainly more advanced investors, they're going to want something, kind of a larger suite of options from a Schwab or an E-Trade. So I think that's probably true, and I don't think it makes any sense really for a ton of attacking across those things. And probably a rising tide lifts all of these boats in terms of the big brokerages.
And never mind, Ethan, that at some point this company might be bought by one of those players that you just listed. And we've seen a massive amount of consolidation in this business. And obviously one way to get rid of that troublesome little competitors to own it.
Well, one thing to speak to that especially is that Robinhood does an especially good job at monetizing order flow and monetizing just the fact that people trade on their platform. They make money by having some deposits, having a premium service, but mostly by selling order flow. And that's something that they have perfected to a degree that the other big brokerages simply have not done. Up until recently, they were charging money for trades. A very antiquated form of making money in this space, we might say now. So I wouldn't be surprised if there were to be some consolidation.
And Ethan, I mean, it's also interesting, the news that we got out today, just in terms of Robinhood's plans for, I guess, lack thereof, for expansion. They scratched the fact of that they were going to expand over to the UK and instead focus on the US. And I'm just curious just to get your thoughts about that move and whether or not you think it is smart to do that at a time where maybe they could expand relatively quickly here overseas, especially at a time like this.
I think it is smart. One of the things that, I mean, Robinhood is clearly a very interesting and fairly successful business so far. They have had a lot of missteps, though, and I think when they move faster than they ought to, and moving fast and breaking things, that is something they can do. When they tried to put out a cash management product, that really fell on its face. So I think that they've probably learned their lesson with respect to kind of those very fast movements. But if they go slowly and really stick the landing, I think they could certainly make that leap. But I think that the old adage of measuring twice and cutting once, they're going to be doing that as much as possible, I would imagine.